Hi, I'm Hannah Silverman, the real estate reporter, reporting for Adelaide Now, and I'm joined here with Brock Harcourts Chief Executive Officer Greg Moulton and the Brock Harcourts Financial Services member Will Chapman. Good afternoon.
Good afternoon.
Okay, so let's start with you, Greg. Tell us how the market's gone in the last 12 months.
Very quick overview of the market, Hannah. It's pretty much as we expected. It's been a very small increase in the medium house prices over the majority of the areas. The upper end did come back a little bit, as expected. We had some really strong growth in the middle of 08 and towards the end of 08, and it just took a little while for vendors to realise that. So top end's come back. Due to the first homeowners, which I'm sure we'll talk about in a few minutes' time, there's a lot of activity in the lower end of the market. Not necessarily a huge price rise, but certainly the activity then just rejuvenated the market all the way through. We had a very steady market, exactly as expected, Hannah.
Is it true that some of the demand in the first homeowner grant bracket has pushed up prices slightly at least?
Hannah, the stats tell us no. And look, this is my explanation for it. In the first homeowners areas like Christie's Beach or those types of areas, there's a fair bit of property on the market and it's fairly similar property. So if I want to buy a 3-bedroom home in Christie's Beach, one, I've got a fair bit of choice. So if I miss out on that one, I can pick up another one. So it just doesn't have that competitiveness for that particular property as it does beachside, where there are more unique properties, less of them, eastern suburbs, hills. So I don't think it's driven prices, and the stats certainly show that. It shows that it's been steady. In fact, almost a status quo.
And over to you, Will. How have we gone finance-wise in the past 12 months?
Well, it's been a very challenging year from a finance perspective. Interest rates obviously have taken a fairly large dive from the highs of the 9.5% that we were seeing for the residential market. They're now down around the low to mid 5%, and certainly have stabilised there in the past 2 to 3 months. Most of the major banks have been taking up a lot of market share and have kept most of their rates at the basic variables around 5 to 5.2%.
Okay, so in the past 12 months, Will, what's been the most common question that you've been asked in your position?
Certainly, a lot of people want to know whether they should be fixing rates or keeping their variable rates. At this stage in the market, we're seeing a huge differential between fixed rates in the low 5% for residential property, and fixed rates are up around the high 6s to mid 7%. Being such a large differential, there is certainly some need to have fixed rates in the market, but they are a little bit expensive. So generally speaking at the moment, most people are able to mitigate the risk that a fixed rate would otherwise offer them in other ways, such as making extra repayments and holding onto the variable rate, which overall is a cheaper rate for them at the moment.
And interest rates in the next 12 months, what are you thinking that's going to do?
Well, the Reserve Bank indicated at their last meeting at the start of this month that we're likely to see the cash rate, which is the rate that the Reserve Bank is in control of, likely to see that stabilise and not likely to see too many more incremental drops.
Real estate market's so steady in Adelaide. I think people should be buying for needs. The investment market, I think, hopefully will kick over the next 6 to 12 months as people again, have some security in employment, take, Will's cheap rates and can get some positive, even in some cases, returns on residential real estate, which has been unheard of as a yield for quite some time, but also take the advantage of what we depict as about a 10% rise in the medium house prices. So as long as Will's right, and he's a very clever man, as the interest rates stay reasonably steady, I think it's an awesome time to be buying property.
And I'm sure you agree.
It is. It's a great time. It's from a debt perspective, it's one of the cheapest times that we've seen in the past, well over a decade now. And investors certainly are going to be flooding back into the market as they see some opportunity. Yields are still increasing, so the rental return is certainly very good on properties. For those first home buyers who are thinking about maybe waiting until September, we've seen certainly some of the real estate available properties for sale in that market has started to drop, so I certainly wouldn't be waiting very long at all. If anything, I'd be very active in getting out there and certainly looking at as many properties as they can.
So get in there as soon as you can, right?
Yeah.
Okay.
Hannah, can I just say one more thing? It's Will's service as a broker compared with going direct to a bank's, I think, really important. what Will and the other people that do work with Will, they're able to go and find you the very best home loan. So instead of being locked and loaded with one particular bank or finance institution, Will can actually go and find. So, I'd encourage, if you're looking at property and you want some really good advice, check out our website and give Will a call, because it is an excellent service. So a little plug for you, Will, but I sincerely believe that.
Okay, and the website, of course?
Just brockharcourts.com.au, and there's a little link there through to the finance gentlemen and ladies.
No problem. Thanks very much for joining us. Thank you. Thanks very much for watching. I'm Hannah Silverman with Adelaide Now, and don't forget to check out our mid-year property guide out on August 1st. Thank you.